Hello, hello, hello. Good evening, good evening, good evening. Let me make sure y'all can hear me. I don't think I've had to test this in a while, but I just want to make sure you can hear me. Hello, hello, hello. Anyway, so I'm excited to be here today. A bank is a business. That's our topic today. We're going to talk a little bit about banks, considering all the things that have been going on with the SVP, the bank that's having some solvency issues, that's affecting everyone's money, and people are wondering what's going to happen to their money, including my family, my friends. Had a long discussion with my dad about it, just so people will understand some basic principles if you don't know them already. Now, as we go through this conversation, there'll be some things that'll be a little bit more complicated that we're probably not going to get into detail about today. But again, just want to give you some perspective and help you to understand a few things. So with that, let's get started. This week's money manifestation, since we're talking about banks, is I am grateful that every bill is paid and every debt will have a zero balance. Put that in the chat if you're watching live or if you're watching a replay. Again, I am grateful that every bill is paid and every debt will have a zero balance. That is our weekly manifestation. I am your girl, Saran. I help people protect income, eliminate debt, create tax-free retirement, set up private banking, and create generational wealth. So with that, let's talk a little bit about banks. Most people have no idea how banks work. Well, let me give you a quick example to get you started. My friend Sally walks into a bank today. She gives that bank $10,000 to hold for her. He says, "Hey, Mr. Bank owner, you can call the bank whatever you want to call it. Here's my $10,000 in exchange for a guaranteed interest rate or a interest rate for my savings, my CD, or my deposit." They're going to give her a certain interest rate. That bank is going to then take that $10,000. They're going to loan it out 9 times. That same money, keep 10% in reserve because they're going to loan it out. And what they're going to do with your money or with Sally's $10,000 is they're going to go make money with it. So they're going to take 9,000 of it and they're going to go make money. Now, when they loan that money out to other people, what they're going to do is they're going to charge them a high interest rate. Now, when Sally put her money into the bank, they probably offered her between 1% and 3%. The interest rates have gone up a little bit, so it's probably a little closer to 3%, depending on your bank. Might be 4%. Just check the rate, right? But at any rate, it's going to be lower than what they're going to charge people to loan that money out. And you think, what do you mean loan the money out? Well, they're going to offer it in the form of personal loans. They're going to offer it in the form of mortgages. They're going to offer it in credit cards. They're going to offer it in lines of credit. They're going to they have all these different products where they're going to loan that money out to other people. But when you think about it, if you're watching live, tell me what you think the interest rate is they're going to charge for someone to come in and borrow that money. If you guess anything like 24%, or it's 18%, or 5%, or 25%, or 29%, or 30%, or 17%, you got that right. The bank is going to charge a much higher rate to loan you the same money that they're actually holding for Sally in good keeping. So they're basically holding the money for Sally, saying, "Hey, I'm going to give you 3% on this at the end of the year." But they're going to go and charge a higher interest rate to the person that they're loaning the money through their various methods, their various tools, right? Again, home loans, car loans, credit cards, lines of credit, all these business banking tools that they use, but they're going to charge that money and get that money back in hundredfold. I mean, it's not even a game, right? They're going to get that money back. Now, what happens is when they take that money and they loan it out, they got to have a certain amount in reserve to guarantee that money back to Sally, who put her money there in good faith and said, "Hey, hold my money and give me a small interest rate on my money for holding it for me," and then go forward. But when the bank becomes insolvent is when they can't meet their debtors, they can't pay their depositors the money that they place there to hold, because they have so many people that they've loaned the money out to, and those people who they loaned the money out to can't pay. So essentially, Sally put her money in there to be held. The bank loaned it out to Tom, Joe, Mary, Sue, and Jane. Tom, Joe, Mary, Sue, and Jane can't pay the money back. Well, now Sally came to get her $10,000. The bank has to produce that $10,000. If the bank doesn't produce it, it has to find a way to get that money. So what do? They sell off assets. They go and look and see where they have other money so they can find a way to pay Sally. Now, if all the people in the bank, everybody who's like Sally, who's deposited $10,000, $50,000, $250,000, $500,000, $1 million, they all come that same day and want their money, the bank is at risk of becoming insolvent, because they got to be able to pay that money. And the thing is that they have all these long-term loans out. It makes it hard to pay those bills back. So then they have to create kind of a frenzy that we saw happen about 2 weeks ago with SVP, and we still are watching it unfold, right? Now, the other thing is that most of us don't pay attention to this when we go into the bank. We have bank accounts, if you even go into the bank anymore, right? But FDIC insured, the Federal Deposit Insurance Corporation, is going to insure your money in that bank. However, and I had this conversation with my dad over the weekend, they are going to insure $250,000 per depositor, not per account. So if you got 4 accounts, not 3, if you got 4 accounts at a bank, and across all 4 of those accounts, you have over $250,000, they're only going to insure $250,000. So if you got $251,000 in the bank, $1 is not covered, and you're not guaranteed to get it. Now, if you got $500,000 between your accounts, and I'm talking business accounts, personal accounts, savings accounts, lines of, anywhere you are storing money, if you have over that amount, and I know some of y'all got $200,000, $300,000, $400,000 in your savings account because you're scared, you don't know what to do. You figure it's safe in the bank. That's the only place. Now, it's safer in the bank than it is in your mattress. But this is what I help people do, is to find ways to protect their money and put it in different places so that it's still gaining some interest, but it's not at risk of not being paid because it's over the $250,000 FDIC insurance. Now, you got to make sure that you have these things happening. Now, if you just sold your house, and people are like, well, who has that kind of money? Some people may have just sold their house, and their house had a huge profit. And when you walk away from the closing table, the bank gave you a check or 2 checks for whatever the sale price was for whatever you got. Now, if you were lucky, you may have gotten $200,000 or $300,000. The first thing you're going to do is you're going to deposit in the bank because you don't want to walk around with a check. Well, then the next thing is you need to get with a financial professional to figure out how to diversify it and get that money split in a few different ways. Now, the thing is that the bank's job, the way banks make money, is off of your money. So your money, you are the product. That's how they make their money. It's how they're able to loan money. Now, the catch is, in my example, when we talked about Sally, she went in and put in $10,000 into an account that's locked in for a period. And let's say she needs that money, 2 or 3 months later. She wasn't expecting this emergency. So she ends up going back to the bank to say, hey, I need $10,000. Let me have a loan. Well, that same bank where she's deposited $10,000 is not going to loan her that money at the same interest rate, so that it's not a huge loss. They're going to loan her that money at whatever her credit score requires and her income level will qualify her for. And she's going to have some structured payments to go back into that loan. So her interest rate could be anywhere from 1% to 30 or 40% on that debt, depending on what it is and if they even give it to her. And so that's the piece of understanding banking from a very basic standpoint, because we just don't know. And here is something that a lot of people also do not know. When they say the feds are changing the rate, the Federal Reserve Bank, that's what it's called. You can Google this. The Federal Reserve Bank is not a government entity. The Federal Reserve Bank is a committee of the 12 presidents of the top banks in the United States who decide what the interest rates are. Yes, you heard that right. The banks that charge you the interest rate are the ones who get to determine what the interest rate is. Wouldn't you like to be a bank? I ask people that all the time. And the thing is that we have to figure out how to make this work for us. So a couple things I want to tell you about. We want to start looking at how your bank is operating, what they're doing. How can you benefit from the products and services in there that are there, and how can you leverage them? But also, how can you diversify and do maybe something a little bit different to be more in control of your money, where maybe you have a process where you can become your own bank, where you can protect your funds and do certain things. Now, the role of these banks is really to keep the money flowing. Now, don't get me wrong, we do not by any stretch of the imagination want any type of collapse in the banking system, because it affects everything, which is why Uncle Joe popped in a week or so ago and said, listen, we're going to guarantee the depositors their money. They didn't guarantee the investors. They didn't guarantee the businesses. They didn't guarantee the people who were doing more high-level strategic stuff. But they guaranteed us regular people who are depositing our money there in good faith. He guaranteed them their cash so they'd be able to get it. Now, that's going to have an effect too, and we're watching that roll out now. But I want to make sure that you understand that these things happen. Banks offer a few different types of services. If you're not aware, they offer savings accounts, they offer checking accounts, they offer CDs, they offer home loans, they offer car loans, they offer personal lines of credit, they offer homeowners lines of credit, they offer lots of credit cards because you get offered those in the mail all the time. And those are some of the basic things that they offer. Some of the more advanced banking systems, like a Fidelity or things like that, which is more of an investment bank, are going to offer you mutual funds. They're going to offer you the ability to trade stocks. They're going to offer you the ability to do options. They're going to offer you the ability to buy ETFs and bonds and municipal bonds and REITs, and they're going to offer you the ability to do all these other more advanced financial things. But the best thing and my best advice is, before you do it, do a little bit of research and contact a financial professional. Because if I came to your job and told you how to do your job after reading 2 internet articles, you probably look at me like I had 2 heads. So that's what I'm saying. When you talk to a financial professional who's been doing this type of work day in and day out and has the experience, the knowledge, and those things like that, you're going to get more than just what the surface information is you got from a quick search on the internet, watching a couple of YouTube videos, watching a couple of TikTok videos, but talking to them specifically about what you have going on is more important. Now, last but not least, I'm here to help. And so if you need my help, you can reach out to me. You can reach me at saran10k.com. You can book an appointment to talk about specifically your own needs, because this by no means is investment advice. This is information and education for you to become more aware of what is going on. And this is a very high level. So the conclusion is this. I really want you to think about this. How would you like to become the bank, or become at least your own bank? 2, what things do you need to do? Do you need to review your savings and checking account to make sure you're not putting too much money in there, or all your eggs in one basket as far as the bank that you're using, right? And then what are some other things that are going on in your life? How are you using your bank strategically? Are you maximizing points that you can receive? Are you maximizing the benefits? Are you maximizing the time frames that they're giving you to pay things off? Some banks have gotten really fancy. I hear Wells Fargo is doing something where you can now get your paycheck 2 days before payday. They're giving you that. They're also delaying some overdraft fees for people, because I guess they made enough money on overdraft fees over the last bazillion years of charging people overdraft fees every time someone blinked, that they are like, oh, you know what, we'll give you a day grace period. But think about these types of things when you're moving forward. And if you're a business owner, you want to take a look at what's the best bank for me. Now, in terms of the SVP, a lot of those who bank there and those who had services with them were the banks, because SVP was an online bank, and it was much easier for our tech startups and people who were moving fast to get their accounts set up. Because if you go to some of the big boys to set up business accounts and things like this, and I experienced it myself with a Wells Fargo, Bank of America, JP Morgan, it can take 1, 2, 3 weeks to get those business accounts and different things set up. But with a lot of online banks and banks like SVP, you can get your account open in an hour for your business. And so the thing is that you have to decide what's going to be best for you. Now, that is all I have today. I wasn't going to be here long, but I will be back again next week, and I have some surprises for you. Now, please be sure to go to saranbaker.co, download your free vision and manifestation guide. Will help you change your mindset and open up your mind and start to attract more money and more opportunities for you to make money, so that you can create the right vision for yourself. So please be sure to go and download that. And don't forget today's money manifestation, which is, I am grateful that every bill is paid and every debt will have a zero balance. And so with that, I'm your girl Saran, and here's to money wellness. So peace, love, and light. Let's get our money right. Bye.